The daily intraday review is proudly brought to you by our visual trade journal. It's software for price action traders. It's a visual trade journal, meaning you can drag and drop right on your chart, rate your outcomes, rate your predictions, all on the chart. It's different than anything that's out there. Come and check us out at intradayreview.com. Hello, this is yesterday's price action for the London session Euro USD 3-minute chart. It was a channel overshoot reversal and broad bear channel. So let's just take a look at how this broad bear channel formed. We'll just jump up to the 15-minute. So as we can see, there was a big range that's been running a few days. We then had a channel form, and we've had the overshoot and the failure. We're expecting the two legs back, and that's how this broad bear channel formed. So the first trade of the night, we saw a break of this green channel, and we had a strong leg up. So bar one is here, so you could take that as a failed second entry short or a double bottom pullback, however you see it. But first trade is on there, bar one, and we're going for that second leg. Because price action is very rangy, we've got price going in and out between the EMA, we're expecting two legs to fail. So the next trade is the failed breakout at the top here. You see the micro double top. We've sort of stopped and waited a little bit, sort of paused there, and we failed there. So this is where the failure occurs, and it's a bigger channel failure. So there's a bigger move down. Of course, when you're looking, say, at the 15-minute, you can see that there's not that many bars, but that is a huge distance when you're trading a smaller time frame. So you know you can hold on for longer. So you're waiting for those two big legs. So if you got that trade, that's a nice one. You can ride it all the way down. You should be looking for bottoms and tops. So there's your line for the bottom. There's your line for the top. So it's one of those channels that forms from like a rangy upside down V style where you expect it to keep ranging, but it ranges just down ways. So you can trade it both ways. It's quite a large channel. I think that's 40 something pips all the way from there to there. So if you got that, that would have been a good night. You can, of course, take the second entry down, which is there's a double top that forms here. It's quite hard to get into, but if you can see the channel forming, remember you've got to pull your channels tight so the wicks are outside or the tails are outside. So you can see that channel. And if you get in there, that is also a second entry short. There's also a double top at the top. It's a nice entry. This entry is a bit more riskier. Even though we had this huge bear gap here, we are hitting the bottom of this channel, and you're going to get some sort of rangy price action going on when that happens. But you should be thinking it's going to ride all the way down here. So if you're holding on, you'd hold down till you hit the bottom of the channel if you can. If it reverses up very quickly, of course, you've got to exit. You can take this trade. It is a bit risky to take it on the first attempt up, but you know, there's a lot going on here. This is today's open line, this orange line. We've had our two legs down, so expecting reversal in rangy price action. We're broken out of this, so we're an overshoot of this blue channel, and we're overshooting this bigger pink channel. So there's lots of resistance, there's lots of buying and selling going on here. So if you do shoot out of there and you see the gaps forming, maybe you can jump on there. Maybe I should make this a little bit bigger. So sort of the looking area is probably around here. If you start to see that you're getting two, you've got gaps. There's a gap, you can see the green here. That's what I draw for gaps. And we head up there. There is another trade here on the failed breakout here of the double top. It's only for a scalp entry. It's a bit more risky. But this trade here is the better trade because you get the second leg up from the strong move. Then we have another trade here where we break across this micro channel here. So I've got this other channel running up there. We go through, we break, and we hold on the top of that channel. So you can enter there. It's also like a little pullback. So we could take that trade up to the top of the channel. You can see the rejection there. You don't take the first entry down. After that, you want to take the second failure down. So we fail. We do get two legs back, but this one pulls pretty far back. So if you took a scalp or you scalped out a portion after a few pips and then you held, you may have got your stop hit there, and then we ran down. Again, it started to trend down. We then had the break of the bigger pink channel after the hours, after the open, but you want to be stopping trading way before then, because look what happens once the London session finishes and then you just, you know, a few bars later, half an hour later, there's always this giant sell-off or buy from some giant bank or institution, and it's just too risky to hold your trades through this if you're trading a smaller time frame. So move your stop if you are in, move your stop to break even or exit your trade. And that's about it for today.